in Africa. I'm very excited to have the opportunity to be moderating this, this session or facilitating it. My name is Michael van During, and I am the technical specialist for the Secretariat of the Smallholder and Agri-SME Finance and Investment Network, or SAFIN. SAFIN is housed at the International Fund for Agricultural Development, or IFAD, in Rome. And as part of this session, we're going to have about 105 minutes, so going through the next hour and 45 minutes to discuss a number of items related to the evolution of digital solutions for access to finance. And this is starting with a bit of a picture of the evolution of these types of services over the last few decades in Africa, in order to understand some of the main stakeholders and some of the developments that have happened in terms of this access and its provision, and how the overall services and products have evolved over time. And then we're going to be looking at trying to understand what the potential is in terms of what these types of solutions realistically can deliver, and comparing this to the expectations that have been developed over the last few years, particularly in terms of the financial products, as we know, around credit, the development of credit services, and as well as savings, insurance, but also looking at the importance of bundling these types of financial products of services with other types of services. We'll be talking about the effects on costs, as well as how these types of products and services can be better tailored to actually fit the needs of the recipients, the smallholder farmers on the ground. We'll also be looking at some of the key challenges to accessing and using these digital solutions, who needs to be involved in order to really deliver on the promise of this potential. And finally, what types of changes and investments need to be going into this sector in order to really be able to expand access to finance for smallholder farmers in Africa in the future. So to run you through the agenda for today, we'll be starting with a 15-minute presentation on digital financial services for smallholder farmers in Africa that will be given by Matt Tchaikovsky. This will be followed by a short video presentation of a case study. And following that, we'll be moving on to a panel discussion to look into applying existing and potential digital financial services to solve the problems for agriculture in Africa. And this will bring together Matt Tchaikovsky with two other prominent panelists who are experts in this area in Africa. Following this, the panel discussion will last about 45 minutes. We'll go into about 20 minutes of Q&A. So we'll ask you there to share your questions in writing, and we'll go through those questions with the panelists before closing. So without further ado, I'm going to pass on to Matt Tchaikovsky for the presentation on digital financial services for smallholder farmers in Africa. Matt Tchaikovsky is the director at ISF Advisors, a strategy, research, and capital advisory firm that's dedicated to working on rural finance. He spent the last 15 years working in the areas of private equity and development advisory for a number of leading organizations. Matt, over to you. I think you're muted. There.
Thanks, Michael. It's great to be here, and I'm really excited to share some of the insights that we have gleaned through our work at ISF in this area. So as Michael said, we're an advisory team that helps develop financial solutions for rural enterprises. We've worked across Africa, Asia, and Latin America on a variety of markets, looking at issues around smallholder and agri-SME finance. And we really work in three main areas. So we do deep dive research, best known for our state of the sector reports into smallholder agri-SME finance. But we also do strategy consulting for some of the leading donors and agri-services providers in the market. And we also have a capital advisory team. So we seek to blend deep market insights and research with an ability to really think through what it takes to successfully serve smallholders in these markets, as well as what it takes to mobilize capital. So what I want to share with you today is really just a snapshot. I only have 15 minutes to provide some context for this topic. So what I wanted to do is start right at the highest level and looking at where we've come from in the evolution of providing financial services for smallholder farmers and work through to some of the leading insights that we're seeing from our portfolio around what it takes to do that successfully. So through our work, we spend a lot of time sort of looking back in order to look forward. And it's really interesting to take a look back on smallholder finance over the decades. This is something that can chart its history all the way back to the 1950s, 60s with the emergence of state banks. So we've captured this as a sort of 40 or 50 year period where government was in the lead, and a lot of the service delivery was through state banks and their extension services. A lot of finance was subsidized and provided in the form of sometimes non-repayable grants all the way through to concessional loans. When it came to sort of the late 1980s, early 1990s, there was a big pivot to microfinance as many MFIs had been quite successful in urban areas. There was this movement to see if a lot of the failings in early state banks could be transformed through applying an MFI model. And we saw that that happen with a lot of privatization of those state banks in the 90s and early 2000s, and the entrance of a number of NGOs who were implementing on behalf of public funders and donors. Those models weren't without their challenges because serving farmers in these rural locations was very, very tricky. So what we started to see then in the 2000s was the entry of the private sector with traders deepening sort of sustainability initiatives and embedding service delivery into their models, including finance off their own balance sheets. In the later or mid to 2000s, we started to see big social enterprises pioneering some new solutions, likes of One Acre Fund in Africa, and some evolved to scale over many, many years with multiple services being bundled in. But the story of the last 10 years has really been a digital one. Almost every form of finance has in some way been transformed by digital technology. From 2010, maybe through to about 5 years ago, a lot of that was about integrating technology into advisory with mobile access starting to creep into very rural areas. But increasingly, we're seeing sort of fully tech-driven business models. And this trajectory, I think, is really important to understand as we think about what's going on right now in service provision in Africa. We're talking about commercially driven service models, service delivery models, and huge use of technology in almost every area. Some amazing research that's been done by GSMA has charted that historical progression over the last 10 years, just in terms of the types of digital services that we're seeing by use case. Now, these numbers are global, but you can see that all the way back in 2009, there was only 53 digital services, majority of which were advisory based. Fast forward to today, and these numbers only go up to 2019, but we're seeing a sort of 13x increase in the number of services, and a real balancing out of not just advisory services, but things like digital procurement, e-commerce, and of course, digital financial services, which are starting to really increase in number. So this is really at the heart of, I think, what's going on in the area of digital for smallholder farmers. CTA with Dahlberg did an amazing report on the rise of digital services for smallholder farmers in 2019, and they started to get even deeper into those major categories to look at what underlie those in terms of sub-services, of use cases. And you can see here that financial services in this map, it's quite small, but if you refer to the report, you'll be able to read up a little bit more. Financial access really breaks down into a number of subcategories. So we have payment solutions, crowd farming, savings, insurance, credit, and enabling analytics. So these are fairly standard categories when you think about serving smallholder farmers with financial services. But what we're seeing now, and I think this is something that's really started to be more understood even in just the last 2 or 3 years, that we really can't just focus on solutions in terms of these neat categories anymore. What we're experiencing is really high levels of convergence between solution types as providers learn that to be successful in serving a smallholder farmer, you often need more than just one service. Providing just savings or just insurance often doesn't work because smallholder farmers have a variety of needs. So we don't have a lot of time today, but I thought I'd really just touch very briefly on 3 examples of where this convergence, but also some degree of scale, is starting to be achieved. So I'll touch briefly on Paygo Solar, which is a very interesting case study that's now reaching millions upon millions of smallholder farmers all around the world. The rise of Agri Insurance and the rise of digital platforms. So pay-as-you-go solar, it's been hailed as a breakthrough solution. It's bringing reliable electricity to, at last count, over 27 million people. And the majority of those are in peri-urban and rural areas where the electricity grid just doesn't extend. So these solutions are extremely interesting because it's the combination of a physical infrastructure, in this case, some solar panels, a battery system, and an access portal that get installed and combined with a pay-go model. So it's the financial services solution that really has unlocked scale in this particular solutions case. In this case, it's the use of a SIM in the control box of that solar system that's used in order to make micro payments over a long period of time that allows a rural family who may not have $200 to spend in this photo an M-Copa solution in Kenya, but can afford over time, as the savings that are realized from that solution come into the household, to pay that back bit by bit over 36 months or 24 months. And that's automatically deducted via mobile money. And it's riding on the rails of an existing distribution infrastructure, in this case, Safaricom and their mobile money solution, M-Pesa. So it's a really good example of convergence. The solution, the technical solution of providing solar in and of itself wasn't enough to scale. The financial service was the thing that unlocked it. And it was how that was all bundled together and presented in a very easy to understand way for smallholder farmers that made the difference. Insurance. So down in the bottom left-hand corner here, you can see a little excerpt from our 2018 report, State of the Sector report on Agri Insurance. And what it shows is that globally, there's 51 million, an estimated 51 million smallholder farmers who have some form of insurance coverage at that point in time. Now, as you can see on the right there, that's fairly skewed towards Asia, which has 45 million of those 51. But you can see penetration in Africa and Latin America that is starting to grow. And it's the innovation about using a different model of insurance, in this case, an index version that allows those insurance companies, often digital financial service providers, partnering with a local insurer to reach farmers at a low enough cost to make that model work. Now, like the pay-go model, this really is a bundled solution. So what we've learnt about insurance is that it's really difficult to go direct to a farmer with an insurance product, but bundled with a seed company and a bag of seed, and having that distribution infrastructure of that product, we can offer a replanting guarantee, for example, or bundled with a lender who is providing loans to smallholder farmers, we can bundle in insurance in that way. So insurance is another example of something that has scaled, is digitally enabled, but really relies on this convergence of physical and digital infrastructure to come together, often in quite an interesting partnership model. The third area I want to talk about is digital platforms. So these have really emerged in recent years, and something we've very recently catalogued in our latest report on the rise of digital platforms. Now, the word platforms gets thrown around quite a lot, but in this case, we're referring to something very specific, and we're talking about models that facilitate direct interactions between multiple users for the purpose of exchange. Now, that's something that we've carved off and made very distinct from the use of digital solutions, which are more linear delivery of a service by a company directly to a farmer, and coordination initiatives, which are often referred to as platforms, but are initiatives that bring multiple actors together. So when we're talking about digital platforms, it's useful to make the distinction between a pipeline business model and a platform business model. In our research, we go into a lot of detail about sort of more traditional pipeline business models that follow a relatively linear process of producing, distributing, and selling goods and services. So you can see the likes of Coca-Cola or Cargill, who have a product that they're manufacturing and selling on to a consumer. That's very different to what we've seen in the rise of companies like Airbnb and Alibaba and Uber that set up a platform in order for two stakeholder groups to come together for mutually beneficial exchange. So Uber and Airbnb, Alibaba, Amazon, these are all companies that have been around for a long time. But what we studied in our latest report is the rising prevalence of these platform models in smallholder agriculture. And they're defined by three common characteristics. They connect multiple users, they're built on this concept of network effects, and they're digitally enabled. So if you look at this graph, it's starting to show this rising prevalence of in this case, e-commerce marketplaces. So you can see here that back in 2000, there was almost none, all the way up to 2010. And we started to see the increase in companies like True Trade or Farmstar or DigiFarm in Africa, or Dahat or Agristar in somewhere like India, or AGRF or Plantix in South America, in Colombia. These are all companies that are sitting as an intermediary, that are facilitating exchange. And it's quite an exciting evolution, because these platform models are creating a degree of market infrastructure that can all of a sudden start to connect buyers and sellers in totally new ways. In our report, we go into quite a lot of detail in describing the types of these platforms that are in the market. And there you can see just a quick snapshot of those that are more on the product side, some are on more of the services side, and some are a hybrid. I won't spend too much time sort of talking those through, but with just 30 seconds left, I guess the key messages that I wanted to convey through this quick presentation are: digital financial services of all types are increasing in Africa, particularly over the last 5 years. However, these services rarely stand alone, but they're integrated into bundles of services that are bringing a payment or insurance or a loan service into into bundles with other types of services, often that use a physical infrastructure. And innovations in how those services are bundled, like the examples of Paygo Solar or insurance, or the use of platforms that integrate payments, are really important. But so are the innovations in the business models that sit behind those services that support that delivery. And this is what a number of companies are really struggling to figure out. How do we make a sustainable business out of these new services? And those are often making partnerships and data sharing really important as an enabler. So let me stop there. I know I've gone a minute or two over, but hopefully that sets the scene for some of what we're going to be talking about today. And I'm happy to hand back over to Michael to take us on to the next part of the agenda.
Thank you very much, Matt. So moving on, it seems like we're not going to have the video portion of this session. So I think actually that may not be that much of an issue, because it will really allow us to build, I think, more directly on this this sort of landscape and broad view of how these solutions have evolved over time, and where we stand today in terms of some of the main challenges and some of the main solutions that are being offered. So jumping straight into this this next portion, I'm going to welcome two more speakers to the panel. The first is Oluwafunto Olasemo, who's the Vice President of Financial Markets at Afex. She's a market development expert with over 9 years experience in delivering financial service solutions to medium and large enterprises. So we'll be addressing some of our questions, particularly around some of those real experiences that we know Afex has been going through to date. But I'd also like to welcome Wambui Chenge, who's the board director, who's a board director, an independent consultant, an entrepreneur with over 26 years experience, and is currently the independent chair of Making Finance Work for Africa, which is an independent initiative hosted by the African Development Bank, and is focused on the development of African financial sectors. So welcome to you both for this panel session. And we'll try to go through a couple of rounds of questions. I believe we have a little bit more time, so we may go into a third round. But to get back to sort of getting a sense of the current state of things in Africa and trying to understand, building on what Matt has just provided in terms of understanding where this evolution has come from, some of the actors involved. I'd like to start with you, Wambui, and ask if you would be able to maybe give us a sense of some of the main challenges that you see in Africa today in terms of access to finance and perhaps some of those other types of services that can be bundled with finance. And those challenges that you see that are maybe best positioned to be addressed through digital financial services.
Sure, thanks. Thank you so much, Michael. And thank you, Matt, for a wonderful presentation, which really laid the scene for what's going on in the digital financial services space in rural Africa, particularly. So my background and my work that really speaks into this is twofold. One is my work with KPMG, where I was agribusiness director, but also led a challenge fund that was funded by MasterCard Foundation, and it targeted smallholder farmers and with financial services, really primarily access to finance for people living in rural areas. And then secondly, at Making Finance Work for Africa, where we have digital financial services as part of our core pillars and some of the work that we are doing with regulators. So I'll start by saying that when we launched the FRP in 2014, 2015, actually, we had just seen an evolution of financial services where before many financial services providers or many financial institutions had been looking to solve and to provide services to SMEs. And once they had figured out, for example, how to move and how to serve from the M within the S, within the SME to the small, they then said, oh, who next? And it was an automatic evolution to rural customers. And so that's where Ag Finance really comes in. And it's been really interesting to watch the development of that. A lot of the challenges that applied then actually still apply now. And that's what I'm going to speak to. So I think the first thing to remember always is that a rural customer or a smallholder customer is actually a person, a human being with many needs. They don't just need services that are related to agriculture or agricultural production. They need a whole suite of services. And I think the evolution that Matt spoke about today is what we have seen, that you get in there, you provide one specific service to a customer, and then you discover actually they need a lot more than that. And that's the direction that, that we're going in. For me, that's the one thing to keep top of mind, that the smallholder is actually a customer. It's just that they're based in the rural areas. And that means there are specificities that are unique to people living in the rural areas that you wouldn't find in African urban areas. The second thing to remember is also that financial services have the potential to create a major pathway out of poverty, but they don't operate by themselves for the smallholder. So if you think about providing financial services to the smallholder, you have to think about not just financial services, but actually what else do they need? So they will need access to markets. They will need access to inputs. They probably will also need ag insurance. And so financial services is wonderful by itself, but it is not the all and the be all. So that said, what have we seen are the challenges? Of course, the first is just basic access to finance. So there's a number that goes around that 21% of adults in rural areas have access to formal financial institutions. And if that still holds true, then it means that at a very, very basic level, small actually need access to formal financial services. In terms of the products that we have seen that they need, a lot of what is being given and provided is basic transaction services. But I would say, and also remittances from friends and family in the diaspora. But I would say that the need is greater than that, given that the issues and the challenges that they have to face. They also need savings and insurance products, which will help them cope better with shocks and boost their resilience. They also need other wealth management products. So for example, long-term deposits to be able to smooth their income so that they're not just living on a survival basis, but they're able to plan ahead and to provide for their families. They also need, as we said, value chain services. And Matt also spoke about this very well. And this provides them this allows them not just to access financial services, but also access to markets and also products that are bundled together, everything from ag insurance. And with the rise of digital financial services, we've also seen the growth of platforms that not only provide a marketplace, but also provide a whole suite of other services. So such as electricity, as Matt talked about, health, consumer goods, even to just make it easier to do your shopping and get your products wherever you are in the most remote area possible. One of the other questions that Michael has asked is, have we seen any differences in the regions? And I would say, yes, there is a huge difference in the development. And we were able to see a little bit of that with the heat map that Matt showed on the maps, where, for example, in Africa, Kenya features very prominently. We also see India, we also see Colombia. And I would say that has to do with the level of development of mobile services. So let me explain. FRP ran over a period of 3 years, during which we ran 8 competitions. From the very first competition to the last competition in 2018, we were able to witness the evolution of solutions that were being offered to smallholder farmers as the mobile money and technologies evolved over those 3 years. And I would say that in Kenya, we went from basic transactions, basic bundling, to a lot more sophisticated solutions backed by technology, and not just mobile technology. We also saw the evolution of just a basic one-on-one service to the evolution of mega platforms, and especially where, for example, Safaricom was used as a platform to deliver very many services to smallholder. Now, we also saw that many applicants were using their experience in Kenya and taking that to other regions, so to West Africa. And this was the case, for example, with a bank like EcoBank and other banks operating in DRC or operating in Cote d'Ivoire or operating in Mali, or operating in Mozambique. Another really good example that shows you the difference between the regions was a company that we were to finance, that was to provide not just access to imports, but also payments and all forms of digital services to their smallholder, to their suppliers. Now, the product was premised on the fact that Vodacom would be setting up bases in that part of rural Mozambique. For almost 2 years, nothing happened. And finally, we realized that it wasn't going to happen. And the company was never ever able to launch its mobile financial services for the smallholder farmers because Vodacom never set up base. In addition, there was war in that area. So it just never materialized and it just never happened. And that is what we're seeing is the difference. So what really makes a difference is the difference in mobile penetration, number one, and secondly, how well developed, for example, mobile money is in those countries. And the more well developed and the higher the mobile penetration, then the easier it is to deploy digital financial services in those countries.
Thank you very much for that, Wambui. I think that really gives us a very good sense of some of the developments that have been made so far, and where we are seeing them mostly, and some of the main differences across regions. And so now that we have sort of a sense of what those challenges are, I wanted to turn back to Matt to ask you, given those challenges, given, I guess, some of the existing technologies, really with the focus on Africa, do we have a sense of sort of the types of digital solutions that hold the most promise, whether it's business models or technologies? Which ones to date have really proven to be the most suitable to address some of these issues of access to finance, particularly for smallholder farmers in agriculture?
Yeah, thanks, Michael. And I mean, Wambui did such a good job just giving an overview of all the different types of needs that smallholder farmers have and all the different ways that digital solutions writ large can be mobilized to start to address those. So the impression that you should be getting is that there's almost not one part of a farmer's experience that can't have some sort of intersection with a digital solution. But that's, I guess, all in theory, all in terms of the promise that presents. It's a whole nother step to firstly be able to provide that service and solve the access challenge, and then go a level further and make sure that that access is resulting in some positive benefits for the smallholder farmers. And the challenge for service providers, of which there's many now on the continent of Africa, who are using digital technologies and finance as a component, is to be able to solve the access challenge, prove the impact, and then put a business model around that can be sustainable over time and scale. And I mean, to answer your question, we really are starting to see the access problem be solved. So the examples that I gave with insurance, I mean, we are seeing hundreds of thousands of farmers in Nigeria, for example, through the input subsidy program run by the government being connected to an insurance product. That's similarly happening in Uganda under their scheme. Pooler, I think, is reporting over 19 million smallholder farmers in their portfolio with access to a pooler-backed insurance product. So that's an impressive reach just through one provider. The sort of story around platforms with DigiFarm now reaching over 1 million farmers in Kenya alone with their platform and their bundle of services, or through the PAYGO models that I gave an overview as well. We're talking about multiple product sets where providers have over a long period of time, and we have to remember that to do one iteration, one test case of how a service works often takes an entire year. So with one planting season in some of these crops, by the time a service has been delivered, a loan has been put out there, a loan has been recouped, and there's this learning process and this iterative cycle of improving that product set. That can take years, and that's what we've seen happen in areas such as insurance, or in PAYGO solar, or in lending. And so I would say that some of those business models are starting to solve the access problem. Many of them are starting then to line up the sorts of evidence that we can show that providing a 1 acre fund bundle that has the access to markets, the access to inputs, the right agronomy training, an insurance product with a funeral, potentially a bundled funeral insurance, altogether creates this delta effect on a smallholder farmer's income. That's been proven in multiple models, but that evidence is starting to show that these solutions can generate a benefit, can generate a livelihood enhancing benefit for smallholder farmers. But I think the real work that still needs to happen is around the business models, because a lot of them are dependent on ongoing subsidy, either from the government or from donors, to keep those wheels turning. And that creates a real challenge, because subsidy is limited, and donor funding is often structured to support innovation. So we can solve the access problem, particularly leveraging on things like mobile money networks or big value chain distribution networks that exist in many crops and commodities. We're starting to understand what works in terms of impact, but there's still many providers that are just trying to work out how to make the economics of their models work. And that's tricky work that that in many cases is still being worked out. And we often don't talk a lot about the failures, but there's many examples of providers who've tried to build something, it hasn't worked, and just like every other sector, the stats on small businesses that are trying something innovative, I think the stats are 9 in 10 fail, and we have seen some of those failures in a lot of these product categories. So lots of positive potential, lots of products that are starting to scale and show that impact, but ongoing challenges around just how to make a business out of that for many of these providers.
Thanks a lot for that, Matt. I think this actually brings up a follow-up question from me, if you don't mind. But given, I think, your work and the fact that you have this global view, and a lot of the research that you do conduct involves different regions of the world, I am curious to know whether you see many differences or similarities across regions. I'm thinking, Latin America and Southeast Asia in particular, but we know that a lot is going on in India as well. And I'm just wondering whether, because so many of these companies are new, a lot of them are startups, and a lot of them just don't necessarily have that input yet or data to really show or demonstrate their impact. If we take more of these experiences into account, is there an opportunity for more global exchanges on some of these solutions and understanding, what can work, what can maybe be applied? Do we see a lot of those exchanges, or are the solutions really, do they need to be very focused to the local issues, and can adaptation be made there? Is there an opportunity around that? What are you seeing?
Well, I think there's certainly lots going on across all sorts of markets, and we're seeing innovations in different areas, and they do tend to proliferate. So sharp entrepreneurs are going to be scanning globally for examples in other markets about what works, and we do see this cross-pollination that naturally happens with folks identifying someone from Kenya in India that's worked out a particular approach to solving the finance issue, or like using Pago model in biodigesters. That was trialed in one market, now it's being used everywhere. But in our research, I guess we've observed 2 or 3 trends that are probably worth mentioning. One is markets where you see a lot more activity and success tend to have quite a vibrant ecosystem. So there tends to be a tipping point around multiple startups coming together and trying to solve these challenges, converging with some donor interest and some of that critical startup patient capital, and then the government, for example, providing sandboxes and giving regulatory leeway to those companies to try something. And that's the sort of secret sauce that tends to happen in Kenya, tends to happen in Nigeria. We see it a lot in India with the tech ecosystems there. Grow Asia is anchoring a really interesting program that's fostering a lot of that ecosystem building and development work out of Singapore that reaches into ASEAN. So there are some focal points, some focal countries where that ecosystem builds, and you can create a system of support that can help a lot of these startups sort of thrive. That can never take away from sort of the fundamental challenge that each company has to make their model work, and a lot of the success factors that go into that in terms of a management team and the right process, the right product, the right technology, and all that sort of stuff. So that's one thing. I think what we're also seeing, though, is some of the really successful scaled solutions are crossing boundaries. And I think this is what Wembui started to describe a little bit with some of the banks. So we're seeing someone like Cropin or Cultiva that's come out of India and Indonesia now scaling all around the world because they've worked out a model, they've worked out the technology, often at really great cost. The capex on some of that like development work is very, very significant. But once those assets are in place and once that team is in place, you start to see this global reach and expansion happening. And that's, I mean, in insurance, that's happening with Pooler as well, who are now operating in 3 or 4 different regions. So that's 2. The third point I'd probably make around all that is the dynamics between some of these markets are extremely different. So the level of concentration that you'd find in smallholder farming in Indonesia or India just doesn't compare to a rural Zambia or Ghana. And so you really need to take those regional differences and the government, the role of government and the way that they position and create an enabling environment. All of that really does matter in terms of how these solutions can both scale and adapt to different contexts. But what is going to work in one market with the infrastructure and level of development of the financial system and mobile network operators in play is not going to work somewhere else where those factors aren't in play. So 3 quick reactions to I think how we're seeing some of those regional differences play out, cross-pollination happening across regions.
Thanks for that, Matt. That's actually really interesting and really helpful. And I'd like to sort of go from that sort of more global perspective and dig into the actual question of, from asking someone who's been implementing a solution on the ground and on how they've been addressing this and how they considered some of these questions of maybe using solutions off the shelf that have been proven elsewhere, or developing their own in-house. Or Oluwafunto from Afex, you guys have actually developed a couple of digital services that you're working on now. Could you maybe take us through what your journey has been at Afex to decide what were the right solutions for you? I guess what was available to you when you had to select what the best solution would be for your particular clients, and then how you went about implementing that, and what have the results been to date? I know that it's still also quite young.
Thank you very much, Michael, and thanks to Matt and my fellow panelists. Let me start by saying that, again, whether in Nigeria or globally, agriculture has been seen as a critical tool for sustainable development, as well as for poverty eradication. And more than 70% of the global food production comes from smallholder farmers. A lot of these smallholder farmers, particularly within the African settings, are highly fragmented. They are not well coordinated. And what this then happen is that a lot of them don't have access to basic infrastructure and services that people living in the urban areas would typically have access to. And just like my colleague on the panel mentioned, that we need to understand that these smallholder farmers are first customers, and therefore every need, even though they're staying within the rural area, every need that a digital financial service consumer would need, they also need access to that. Now, coming home to Afex in terms of what we've done, and particularly the peculiarity within our area. Afex is a commodities exchange that tries to close the gap between the commodity space and the financial space. However, when we started about 6 years ago, we found out that there were lots of groundwork that needed to be done to even be able to run a viable commodities exchange. As you all know, an exchange is pretty much a marketplace platform that connects the producers of commodities with the consumers of commodities. But if the producers of commodities don't produce the right thing needed to be traded on the exchange, then they've not really produced. So for us at the initial stage, there were a lot of work that needed to go into, number one, guaranteeing even supply of commodities to the exchange, ensuring that the commodities that are being produced or agri crops that are being produced meet the minimum requirements or the base grade of commodities that needed to be traded and are acceptable by the buyers or processors or aggregators of these commodities. Also, apart from that, there's also the need to also ensure that farmers that produce this year continue to produce. in subsequent years, and there's an incentive for them to do that. What that then brought to our realization is, because of the highly defragmented nature of smallholder farmers in Nigeria, we had to do lots of backward integration with them. And you would say that as an exchange, backward integration shouldn't be the core of what an exchange or a commodities platform would do. But again, if you look at 30 years back to most of the advanced commodities exchange, right, they pretty much started with physical, where they do backward integration to aggregate the farmer. So again, learning from all of those ones that have gone ahead, we had to do the same thing. And this also then required lots of investments in physical infrastructure, in technology, and also in bringing together financial services that ordinarily are not available within the localities where we operate. One very interesting that is very unique in every farming or production region where we have a boots on ground is the fact that nearly every smallholder farmer within that region either has never had any form of banking experience or never had any form of identification. So what we then had to do was to first create financial footprints to all the smallholder farmers within that region. And this then requires us working with other financial service provider to first create financial footprint for them by creating bank accounts, enabling they have what we call BVN. BVN is a unique and verification number that connects every user of financial services across all the platforms that they use the financial services. So having done that, that gave the smallholder farmers the initial financial footprint they need to be able to access every other services that are provided through a digital platform, and also give them a sense of identity. And having a sense of identity goes a long way in ensuring that the farmers not only are able to produce commodity in a very profitable manner, but they're able to also live above the poverty level as data begin to gather, and then services, whether directly related to agriculture, in which they major in, or other national initiatives can then be directed towards them. And again, this wouldn't have been possible. So if you look at in terms of technology that we also use, and it also goes back to understanding the peculiarity of each of our environments and adapting the digital financial service or whatever platform that you would be bringing on board to ensure that it matches the need and the uniqueness of your environment. We've tried both foreign digital services, and we've also tried local. At the end of the day, there's a mismatch between the service provider and understanding of how the value chain works. So the best solution for us was then to now begin to build some of these financial services in-house. And as of today, we have two major technology stack that allow us provide not just digital financial services to smallholder farmers within our ecosystem, but to also enable them to be more profitable. And what, again, our technology also did for us was the fact that it allowed our customers to be able to, we could also measure impact as well. So one of the, we did our impact assessment report earlier this year, and we found out that smallholder farmers that done stayed longer with AFEX had less likelihood to be food insecure. Again, this goes a long way to show how financial service integration with the value chain integration is very important to deliver an holistic service, or to deliver an holistic value to the smallholder farmers within the community that we operate within. Thank you.
Excellent. Thank you so much for that. I think one thing that I find very interesting in what you've presented is also we talk about the very different needs of smallholder farmers and how important it is to sort of bundle a lot of the solutions and services in order to allow them to be able to really grow. I mean, they have all of these different needs. The need to build on each other to really be effective, because otherwise you're only addressing one part of the issue. But one thing that also comes out for me is the fact that the institution that's providing these solutions needs to itself have the right solutions in place, a lot of which are digital, to efficiently deliver on those different products and services, and the fact of being able to work with others, which requires potentially integration in terms of the different digital solutions or products in order for everyone to work together, which I think is one of the important aspects that needs to be considered as well. And you know, as we you've also mentioned some of the key issues that you encountered in terms of your actual clients, and the fact that a lot of these products were new to them. And I actually want to sort of come back to Matt as we look now, now that we've sort of established some of the key challenges that we're trying to address, on how we can move forward to improve this access. Matt, do you have a sense, or could you maybe give us a sense of you know, what you have seen as some of the main issues to actually growing access to finance, to have more participants, and you know, and maybe also getting a sense of who needs to be involved, because we are talking about, you know, bringing together a number of different actors. And so what type of partnerships do we need to see in order to make that happen?
Yeah, thanks. I think, I mean, the AVEX story is an interesting one, because they really started as just a private commodity exchange. And as has been sort of explained, there was this progressive understanding of the sorts of backward integration that needed to happen, finance that needed to be lined up in order to make that all work. So they maintain a big physical infrastructure in order, and digital capability and financial services capability, all to make this integrated system work. And that's something that they've, to their credit, progressively learnt through experience and continued iteration about how to do in refining their business model. I think the answer to your question, Michael, in large part comes down to solving the distribution challenge. So if you put aside and take for granted that the digital solution is sound and robust and the technology works, it's really about how to cost effectively interface with farmers with a trusted relationship. That, I think, plus tailoring products to the specific needs of smallholder farmers. So over the past 10 years, we've been really thrilled to witness an evolution in how we talk about smallholder farmers. In the past, it was smallholder farmers as a cohort that exists globally. There's probably 450 million of them. It just doesn't work to consider smallholder families and households in that way. We really need to understand the specific profile and needs of those farmers. And so we've been involved in a lot of the work that's been trying to segment and sub-segment and understand the dynamic progressions and choices that smallholder families make. So I think you need to get your technology right. It needs to be customized to specific needs, and the product needs to be customized to the specific needs of smallholder families, often in a bundled fashion. But then it often just comes down to the prohibitive costs of building a physical distribution network that can interface with farmers. So if you look across markets, there's core infrastructures that already exist, and mobile network operators have a sort of low touch, very efficient way of communicating with farmers through their mobile phone. You have networks of input providers that can be another channel to market for a lot of technologies that are being used by many startups. You've got the big trading companies like Afex who maintain these big offtake infrastructures and networks of warehouses and trading vehicles to collect from the farm gate. You've got big agronomy systems, support systems in many countries, and government extension services. And I think what we're seeing is many service providers who are expert on a technology and a disruptive service are starting to partner with those big distribution infrastructures to combine the good products that can help with an existing infrastructure. And I think that's at the heart of what we see happening. A lot of what makes that work actually gets into the nitty-gritty of how our service gets layered on top of that distribution infrastructure and how data flows. So we see a lot of complexity around what data exists, who owns it, how that data is managed and is shared between providers. We've done a lot of research on that, and you have the likes of the AgriFin team at Mercy Corps spending a lot of their time just trying to work out how complementary partners who have different capabilities can come together to deliver a service and share data effectively to do that. So I think those are the ingredients that need to come together to make some of these products work. But it's tricky. It's tricky work to get right.
Yeah, thanks, Matt. It's clearly quite complicated, and actually I think it'd be very interesting to hear from Afex again. Oluwafunto, are you maybe able to give us a sense of how Afex has gone about really identifying, what the main issues or gaps around some of those challenges that Matt just brought up, in order, and what solutions you have brought to address them, including addressing some of those costs, including potentially working with other providers to share data. What type of data have you been able to share to really address the issues that you identified and get the product right to adapt to those needs?
Thank you very much, Michael. And just to again, without having to repeat myself, is that most of the services that we've had to provide within the production area where have actually been around first understanding the value chain of the smallholder farmers, what they produce, how they engage with the market, and how the market that they engage with are organized, whether they have tight integration with an organized market, or they have very loose integration with the market. And having to understand this would help us to identify what kind of mechanism that would best fit the smallholder farmers within specific commodity producing region. And once that value chain has been properly assessed, the next thing for us was then to see how do we identify whatever financial service that currently exists within the space. Is there any financial service or is there any digital services available? Where there is none, what are the gaps that we need to fill? Where there are some, what are the other players that we need to engage to ensure that we deliver these values to the smallholder farmers? And having done that, putting the assessment of the value chain with the financial services, whether available or not available, we then do an assessment of the viability or the visibility of whatever digital financial or whatever platform service we intend to put in place. And that kind of give us, knowing the type of market actually help us to put all of this information together. In terms of information that we've been able to gather that helps us to shape how our services are delivered, the information around real-time weather information. As you all know, for Nigeria, we're largely a rain-fed agricultural space in which planting happens once for most of the crops. And so the smallholder farmers would typically need information around the weather, and so that they can properly plan their planting. There's also data, we gather data around production data to see what the impact of the, say, input program or extension services program or storage program that we provide to them. What's the impact? We want to see, is there an improved productivity or is there a decreased productivity? Was their standard of living better this year than they were last year without access to that? Other information are also trade data transaction. And this is very, very important in building any financial, in allowing any smallholder farmers be able to access financial services, particularly on the credit and loan side, right? So prior to AFEX entrance into this market, again, a lot of them do not have any form of financial footprint or any form of digital footprint. Bringing them together, creating that financial footprint for them and giving them access to digital financial services in addition to other value chain integration, allow them to build their trade transaction data, and building that trade transaction data then help anyone interacting with the data to be able to see how profitable certain classes of commodities are. It's also helped the government in planning interventions for specific commodities within the region, and also help in forecasting in terms of where deficiencies of production or supply demand chain deficiency have for some of these commodities.
Excellent. Just a follow up on that. So you closely monitor. I mean, you've developed the solutions and services on the basis of your analysis of your clients' needs and their existing relationship with their value chains and their access to market. Is there a active effort on the part of AFEX to reassess the type of products that they're offering on the basis of the continuing information and feedback that they receive from clients, understanding, you know, how well the products are actually performing, how well how much the clients are potentially growing in terms of their activities, etc. Is that an ongoing process?
Definitely. Again, what we do at AFEX is, I see it as an ever-evolving activity. There's no start or end point to what we do. And given that you are humans, we exist in continuum, right? So everything we do, let me give you a very classic and very practical example. Is there was a few years ago, there was a particular season where we provided input financing to smallholder farmers, and that input financing typically will be in form of seedlings, fertilizers, and crop protection products, extension services, etc. As a way of getting feedback and improving on our service delivery and ensuring that we go through the right iterations. Again, I did mention that we take production data, whether to see whether there's an increase in activity. In a particular year, we found out that a particular fertilizer that was disbursed to us, there was a decline in yield pretty much. And we then began to trace back what could have happened, what happened the season preceding that, and why did we have that decline in production. And that actually helped us in the following season on, again, on the research in terms of what type of fertilizer we should be using. Could it also be the practice of planting where the crops properly spaced, where the fertilizers are applied at the right time, were they too early, were they too late? So again, we constantly evaluate outcomes of our engagement with the smallholder farmers on an annual basis. We also work with, we have data partners in Nigeria that also help aggregate all of this data together and then help us extract useful information that help inform other decisions and implementations in subsequent seasons. So there's a deliberate, conscious attempt at taking feedbacks from the smallholder farmers that we engage with to ensure that we are applying the right services, we are giving the right input, and impacts of our services is being achieved, and we're seeing the right results where we want to see the right results.
Fantastic. Thanks. Thanks a lot for that. I think, giving that example really adds some color to how you guys are addressing some of these issues. Now, sort of shifting gears as we're sort of closing this this portion of the panel discussion. And just trying to get a sense, again, I think sort of focusing out a little bit on what we need to see happen to really, really increase this access to finance through these types of digital solutions. I wanted to turn again to Wambui and try to get a sense, if we zoom out again at the Africa level, we've discussed what types of solutions are available, trying to get a sense of what we need to see more of. But we know that there are some really clear sort of technical, very basic sort of infrastructure level challenges that need to be addressed as well. And at the start of this discussion, you had mentioned how access to mobile penetration was one of the clear indicators of where we're seeing more development of these types of solutions, and we know that developing those needs some real investment. And so I wanted to see with you, what are those main investments that we need to see in order to really sort of get to the next level on the delivery of these types of services?
Sure, thanks. That's a really good question. And it's a big picture question. And it's also a market, for me, a market systems question. It's also a question that I think involves all the key players and stakeholders that would be involved. And I'll tell you what I mean by that. So Matt spoke about ecosystems. The better the ecosystem is the more developed the ecosystem is, the better and the more suite of products, for example, are available for smallholder farmers. And that means that anybody who's thinking about developing this space really has to actually step back and look at the wider picture and look at all the stakeholders and understand what is needed. I would also say that in order for this to be sustainable and for it to really reach scale and transformation, because when you talk about transformation, you're really talking about like wide, you're talking about spread, you're talking about what Safaricom has been, what M-Pesa has been able to do for Kenya. That has happened with two things. One is the fact that Safaricom has such a unique place in the Kenyan market. So it's huge. Yeah, it's a big boy in the country. It's also in a very unique position, which is not likely to be replicated in other countries. It also happened because the middle class in Kenya adopted M-Pesa, not so much the poorer people. And that then gave it the wings that it needed to fly. And what we are seeing, what I would say for me, and where I've seen the big changes happen, is when you see companies like Afrex. And doing business in Africa is really unique because you have the solution, but then you realize, oh God, my product is not going to sell by itself. I have to build the wheels, I have to build the rails, I have to put the infrastructure in it to make it happen. And that kind of investment is so huge. And it only makes sense if it's profitable for the businesses and for it to be sustainable. So I would say you need a lot more private sector intervention and players getting into things for you to make it happen. Investments by the private sector. And I would say big private sector institutions getting into this space. Now, in terms of some of the infrastructure that we need, so from a financial sector perspective, one of the areas that we saw really transforming was in the PAYGO space that Matt talked about earlier. And what happened with PAYGO was that actually DFID, through its challenge funds and through the Africa Enterprise Challenge Fund, which was managed by KPMG, funded most of the PAYGOs that you see in the market today. And that was through the challenge fund mechanism. I know competitions are really popular now, but the reason why they work is because you don't just finance winners, only one organization to provide a solution. You start races. And when you start races, it means that you're getting more than one player into a particular space. And there is huge opportunity for transformation. So the more players there are, the more competitive the space is, the more the efficiencies will be realized, and the more lessons there will be learned, and the more opportunity for transformation. That PAYGO transformation happened because DFID started a race within the PAYGO space. And that's one of the things that really needs to happen within this. So start races, support innovation, and support scaling. So if you're having a scaling competition, for example, don't just support one. Support somebody in Senegal, support somebody in Cote d'Ivoire, support somebody in Ghana, doing exactly the same thing, and let's see what works and what doesn't, and what is needed for transformation. Then still within financial sector, because I think that the investments really plays a key role in getting the infrastructure going, because as you saw, it's a huge investment, and it's a huge capital investment that's required at the beginning until you get to a level of profitability or sustainability, I would say we need blended finance solutions. So, so that's combining commercial capital and catalytic capital or concessional finance, whether it's in the form of grants. And the reason why blended works is because you use it to, it can be deployed in very many ways. And it also brings the big boys and the small boys into this space to support innovation and especially scalable solutions and demonstration effect. Then the other thing that is needed, I would say, is we need a lot more sandboxes. So both at the regulator level and at the institutional level. So we have regulators, for example, in Kenya and Ghana, and I think Nigeria now, that are supporting innovation through creating sandbox for innovation in digital, in the digital space. And that's really good. In Kenya, a bank like Equity has actually a different team that works on innovations that are then scaled. And we need to see a lot more of that happening within organizations in Africa. M-Pesa was an innovation within Safaricom. And at the beginning, not even the staff believed in it. They were like, that thing, it's not making money, it's losing us money. But look what Safaricom is now. Is it a telecom company or is it a financial services provider? Yeah. So that support, patient, space for innovation, is room for making mistakes needs to be supported. How do you support companies like Affix who need to build the railing? That's a huge capital investment. Within the regulatory space, one of the things that we're doing at Making Finance Work for Africa is working with regulators, so central bank officials, to understand the fintech space and to see whether we can standardize regulation for fintechs, the capacity of central banks to understand the fintech space and to regulate them, but also taking care not to steal innovation. And I think that will go a long way towards boosting digital financial services on the continent, particularly when you have a regulator who understands and who supports innovation and technology. The other area that I would say, so we talked about just really basic example of having masts in a remote area. So what's needed I'll just use an example of Kenya. So we have mobile money penetration of up to about 85%. So that means there's 15% left. What is needed? What kind of investment in infrastructure is needed to take financial services that last mile, that 15%, so that we can get to 100% penetration? How do we get people to access more sophisticated financial services? And how do we get them to go like really broad and wide? And I think some of what is going on in countries like Ethiopia is really interesting. So making sure that we have affordable feature phones being assembled and manufactured on the continent, that really makes a big difference and makes sure that instead of a feature phone being like $100 or $100, it's now maybe $30, a little bit more accessible to ordinary people. Then that allows for more sophisticated products to be deployed and allows and also answers the distribution question. Another area that's really, really important for taking this wide, and Matt really spoke to it very well, is partnerships. So the reason I say we need the big boys is because fintechs typically tend to be really tiny, but they're innovative, they're nimble, they're agile, they can see the problem. These big institutions are like dinosaurs and take very long to move. and to get to market, to understand the customer needs. If you have a partnership of those two, then you have something that really works well. So really good examples. Again, Puller's partnership is with Bayer, for example. And with that, they've been able to deploy and to reach all those farmers that they have reached, because they've partnered with a big ag organization that also has the infrastructure in the rural areas. Bayer has been operating for a long time, and that has enabled them to get into that space that has the customer base. If we talk about the investments that is needed, the capital investment, if you work through a provider or an organization that has a platform, Equity Bank or even Safaricom, then allows you to build and deploy your services using their infrastructure, then you're onto something. So partnerships for me really work. In the PayGo space, we've seen M-Copper, for example, partnering. Of course, it deploys its services using Safaricom, but what it's also done is built in partnerships at the rural level and at the base level with agrovets to provide not just the PayGo system, access to electricity, but also at solar power, but also now access to ag inputs, but using agrovets. So partnerships for me are the key, and they need to be equitable, they need to be supported, and they would really help solve and transform the industry. Thank you.
Thank you very much. That was extremely comprehensive, and I think covered really all of the bases. And we're really reaching the end of the time allotted for this this session here, and I just wanted to see if I could get a quick last round of answers from you all, just to get a sense from you, whether it's linked directly to what you are working on, or just your general knowledge. What is it that you think or see as the most promising up and coming development in this space, whether it's a technology, whether it's a specific business model, or a specific type of partnerships? Do you have one specific area that you think really holds a lot of promise going forward? And maybe let me start with you, Oluwafunto. Do you guys see something in particular that really gets you excited?
Yes, thank you very much again, Michael. And that's a very interesting one. In all our endeavors to smallholder farmers in places where we operate, what we found out is that it's always very convenient and very impressive when you can provide services that cater to a variety of needs, and that has been our job so far. And one of the things, again, I'll give a very classic example. If you look at the poultry sector in Nigeria, it is largely, you have pretty much three tiering of the players within the industry. You see the big players, you see the medium players, and you see the very small players. What we found that from the very small player is that beyond access to financing, yes, they need a lot of financing, but there are other challenges that they have, like storage, like access to aggregation, being able to plan their production adequately. So what we have seen that is very promising for smallholder linkage to the agro processors that are really, really within the small space is a marketplace platform adoption, where agro processors who ordinarily do not have the capacity and the resources of the medium and large players can come in, and then that platform becomes a one-stop shop for them, where they can have access to buy the necessary commodities or agri products that they need from the smallholder farmers, on the back of being able to have access to those commodities. If they need financing or any form of credit to finance that purchase, that is also available for them within the same space. And a lot of them, when they also buy, they do not buy because they need immediate consumption. They probably need storage for a number of weeks, for a number of months, and then being able to provide within the same ecosystem where they have purchased, gotten financing for the purchase. They can also have storage access on the back of this, because what is then traded on or what is then provided for them is an end-to-end access to commodity, access to financing, access to storage. We see that really becoming, and it's within our market, and it is a potentially big and huge market for players who are looking at adding financial services to value integration for big business.
Excellent. Thanks for that. Yeah, very, very interesting. Matt, same question. What gets you excited in terms of up and coming solutions?
Well, I think one thing that hasn't really come up in this discussion yet is just the climate imperative and the whole challenge around the adaptation agenda for smallholder farmers. And it's what we're spending a lot of our time thinking about and working with our clients on at the moment. Not just resilience in general, but what are the enablers that are going to allow service providers to be able to design climate smart services for smallholder farmers. And I think one of the biggest and most exciting things that we start to see happening is really unpacking data. So national level data hubs that can draw in a whole bunch of data and make it available to private sector service providers who would never be able to afford to invest in that core infrastructure. We think that could unlock all sorts of new services, everything from climate smart advisory services through to new credit scoring algorithms to increased insurances with new indices. And that's I guess that is the role of governments to take the lead on some of that, but we're seeing some really cool innovations around how to get some of that data digitized if it's out there in the ecosystem but not accessible, or to generate more local data on the status of yields and soil moisture and using remote sensors. So that's the space that I think is going to be a critical enabler for dealing with the climate crisis. But also I'm really excited to see what new services can ride on that new wave of innovation in both data collection, but also how those data sets get combined and housed and made freely available to the private sector to innovate with.
Thanks, Matt. That the climate challenge is certainly a big one that that needs to be addressed quickly, and these digital solutions certainly hold a lot of promise to deliver on that for sure. And so finally, Wambui, what are your thoughts on this? What is it that you see as really holding a lot of potential in your work?
Sure. So I think that platforms really hold a lot of promise. And platforms come in many forms. Some of the most, they are turning out to be some of the most exciting innovations in this space because they take a holistic view of the smallholder farmers. They also provide key data that previously was never available on the smallholder farmer and the rural community that can then be used. So I'll give you two examples. One example of a really amazing platform that I've seen, and then what data being held by the private sector means. My thoughts about it. So Copia is a company in Kenya that is that is a platform. It's like a Jumia or an Amazon for rural services. That's the best way to think about it. And they describe themselves actually not as a platform, but actually as a logistics company. For them to build a sustainable business and a business that delivers goods to rural communities, they have had to invest a lot in logistics, understanding and building a network in the country that serves rural communities. It's really exciting to see the work that they have done and how they're able to reach. It's transformed the lives of people in the rural areas because, as you know, when you live in the rural areas, it's almost like a hub and spoke. So there's the urban area, and then there's the rural center, there's a town, and then there's a rural shopping center, and then there is the person who is now a little bit far, who is far from the rural center, who is really far. And how does that person who's really far access, and how often do they have to travel to the rural center just to get a basic commodity like toilet paper or something maybe. And for me, just seeing how that works was really transformational. Now, what was exciting was that they then created this platform. And guess what? It provides consumer services, everything from milk, sugar, flour. Then it provides goods for building the house. So steel, I know the word in Swahili, I can't say it in English, roofing, tiles. And then it provides ag equipment, it provides wheelbarrows, it provides inputs. So to do all this, they've had to develop partnerships, yeah? And then they have then plugged in financial services for those rural communities, which means that now a farmer is able to not just buy his products, but he now becomes a financial customer. And that also then changes the nature of what Copia is. At some point, it becomes a financial services provider. So for me, that's where the innovation is. It is people figuring out, how am I going to serve this rural customer? And as a result, innovations keep coming because, you know, entrepreneurship is a journey. So that's one. But now, as a result of all this amazing and interesting stuff that is going on, there's a lot of data about the rural customer that is being held by private companies. This data is not even available to government. And if you were to go to the company and ask for that data, even the company will ask why. And that's even compounded now with all the issues around data privacy and laws. And for me, this information, I really don't have the answer to that, because this information is really critical for policy people, for everybody who's working in the policy space, just to understand rural communities better and to understand the smallholder farmer better, to understand their spending habits, what they need, how much they make, what is their income. All that is.
I'm sorry, I'm going to have to stop you. We're on the last minute here, and I think you're absolutely right on all of those points. I do want to just take 1 minute, because I think we're going to be cut off, to thank everyone. Thank you all for really what's been, I think, a really very exciting, very interesting conversation, trying to address a very large topic. We could go into each of those points and do a session and spend an hour on each of them. So Oluwafunto, Wambui, and Matt, thank you so much for your time and for sharing your experience and expertise on this point. And I'll talk to you again very soon, I hope. Bye-bye.